I'm Clare Thomas. I'm a partner at the law firm CMS, and we're actually the largest real estate practice in Europe, and we work with clients across the whole life cycle of real estate, from student accommodation, co-living, build to rent, and of course retirement living. My particular interest as well is that we have this year produced a report on the future of urban living, and we've polled real estate professionals and consumers on their views about where they live, whether that's student accommodation, retirement, micro-living. Yeah.
Great, Rainer.
I'm Rainer Nonnengässer. International Campus is a developer, operator of student accommodation and micro-living schemes. We started our journey 8 years ago in Germany, expanded pretty quickly into the Netherlands and Austria, are today also covering CEE. We have some 5,000 beds in operation and another 5,000 in various stages of delivery.
Great.
My name is Rienk Oosterhof. I'm on group level of the student hotel, responsible for the real estate, meaning the investment as well as the development, and I'm handing it over to the operational side. As Adam said, we do development, investment and operations ourselves. As a student hotel, we call ourselves a hybrid model. So we switch our rooms quite flexible between student rooms, hotel rooms, short stay rooms, and we combine that with co-working. We are active in 7 countries in Europe today for the last 8 years, and we have 6,000 beds in operation and roughly 12,000 beds in development.
Okay, great. Thibault.
Hi, my name is Thibault. I'm working for debt investments within the LaSalle group. So the debt funds are roughly 4 billion out of 60 billion. And within the equity side, so the direct investments, there's a large portfolio of student accommodation. And the debt investments have actually started picking up by knowing the asset class from the equity side. So we started with a development finance fund, which is now 1.5 billion. We started in London, then expanded, so within the student accommodation theme, expanded from London to the UK, and then from the UK to continental Europe, where we've done deals in Spain and active in Portugal, Italy, Ireland as well. We also invest through the mezzanine fund on student accommodation, and we are now building a whole pipeline also in the co-living and senior living space.
Great, thank you. And if you've got any questions you want to ask, please do. And if there's room here, if you're struggling to hear at the back, there's places either side. So do come forward if you're struggling to hear. Good. Let's start, Claire, with you. In terms of some of the research that you did anything come up in terms of particularly that sort of co-living, student housing sort of space, in terms of what people want? And did that reflect also what Samuel had found in his research?
Yeah, absolutely. I think there were 2 things that really came out, and it was the use of space. I think when we asked our consumers, and that was over 6,000 people across Europe, the majority of them said that they would be happy to have smaller living space in return for better community space and more shared services. So I think that then lends to the wanting the sense of community that I think Samuel was talking about.
Okay, good. And Rainer, just for those who may not know the difference between, how do you see, I suppose, the differences and similarities between micro-living and also the student housing sector?
Well, we focus on the first third of the life cycle, which means people in education, whether they're apprentice or students, and the phase after having completed higher education, which we call unsettled professionals, which is entrepreneurials, which is to a certain extent commuters, which is people working on projects who want to spend a short period of time in a city. From a product perspective, there are a lot of similarities in the requirements of these different target groups. For sure, there are variations when it comes to locations, where students have more focus on accessibility to university and also sports and nightlife, and young professionals are more focused on access to CBD and also leisure aspects. But there is a pretty high homogeneity on the product side for these various target groups, which pretty much gives developers and operators the opportunity to widen the scope and embrace both of these groups. And also the borderlines between these products are more and more meandering away. And especially those who have spent their higher accommodation period in a PBSA product are looking for something similar whilst taking on their first job in another city.
Okay, good. Maybe just picking up with you, Thibault, and you're obviously lending on these as well as LaSalle has produced funds on them. In terms of the sort of capital that's looking at the sector, are you seeing that move from initially maybe people interested in student housing, now moving more towards micro-living, co-living, different forms of that residential sector?
Yeah, definitely. I think it's a recurring theme that a lot of developer operators started in the student accommodation sector and now are trying to expand into a wider group. And the first thing they do is actually trying to get a very smart planning by having a sui generis planning like in the UK. And that makes us even more comfortable because we know we can tap into the sort of demand that Rainer was saying. And there are some other people who are actually looking at a purely co-living sector with having various different planning use. So you have to underwrite, mixed use and try to break down the income by different uses. So that makes it even more interesting, I find.
Okay, good. And Rienk, just coming to you, the student hotel, you mentioned it's a hybrid product. Started out as a hybrid between student living and hotel. But now you're also moving into co-living, co-working. Just explain that strategy a little bit.
Well, what we see is indeed that the boundaries between, let's say, young professionals and students is way closer than we always thought. Where in the past everyone thought that, let's say, a young professional was searching for their own house. Nowadays they're searching for communities. And the level where young professionals are traveling and having jobs for 3-4 months up to a year in a location is one of the key elements in their steps of their career. And we see that our product, in principle, fits those users quite easily. So we haven't adjusted heavily to focus on that community. And I think on a natural way, we went in that group by using our short stay rooms, which is in principle the same room what we use for students, with the exception that they have a private kitchenette.
And
I think that's a really interesting point, actually. It's the mobility of society now. And I think when you leave university, you no longer think, right, I'm settled in a job and a place, so I want to buy a house. And I think we move around a lot more so that we want the same flexibility in our housing choices.
Yeah, no, I think that's a good point. I mean, I've actually stayed at the student hotel when it first opened, pretty much in Amsterdam. So I've tracked that a little bit. And are you finding that the facilities, you've had to adjust the facilities over that time in order to meet these different demands, or has really the product stayed very similar?
Well, the product is similar, but at the same time it's evolving. One of the things we added is our co-working space, where we started off doing it small. Nowadays, on average, every location has between 1,500 and 3,000 square meters of co-working, which is an easy one, again, for those community to use that space. When it gets to facilities in general, I think we always had a bit of a premium element in the student hotel, and I think that fits quite easily into that group of people.
Okay, good. And just coming to you, Sami, when you're looking at some of the countries particularly, are you seeing different rates of development, and are you seeing also this kind of blending of the different types of offer?
Indeed, in some territories like Germany or Central and Eastern Europe, we see more hybrid schemes than in other territories. It's not only because of the zoning. In these territories you can do student housing and micro-living or co-living project under one same zoning. You cannot do that in Barcelona. But it's also the demand side. So the target audiences of students and young professionals are more evenly split in these cities. So if you can charge young professionals more than students, then if you open the product to this target audience, then you can gain over there. And as it was said, these target audiences are very close, have similar patterns, similar demands and preferences. There is no recorded conflict of these audiences in any of the buildings. They actually feed the life to each other within the building. So it's a increasingly more popular solution for the developers, for the investors, and operators as well.
Okay, good. Rainer, from your point of view, looking at the trends, do you then see that you may well move from micro-living into co-living into, I mean, you were talking about those blendings. Does that mean, in terms of your strategy, you would also expect somehow to develop the product that you're moving to? And my other question around that is this purely an urban strategy with universities, or as you move into the more sort of micro-living aspect, does that mean you can actually move into different parts, and is that then more about mixed-use kind of elements?
Yeah, good question, Richard. A few comments on that. I think, as mentioned earlier, the borderlines between all these different name tags being student housing or micro-living, co-living, PRS, and whatever you put on it, this will all disappear or will lead into one blended product which embraces the requirements of young people. And these requirements come from affordability trends that we see in a lot of urban spots across continental Europe and also in the UK, as rents have grown significantly, prices have grown significantly, so owning is less an objective than renting. Secondly, the young people have a way higher affinity to flexibility and mobility as 10, 15 years ago. And this leads also to the fact that community, from our point of view, is one of the key aspects in the spectrum, let's say, between 18, 20 and 30, 35 years of age. And each and every developer and operator will have a different or a slightly different interpretation of what this product should look like to meet the demands of these young people. And whether then they call themselves co-living providers like the guys over here, or hybrid providers like you, or micro-living providers like we, I don't care. I think we will see this trend affecting rental resi markets where they exist, which is, for example, in Germany, a big thing. And it will lead to the evolution of such rental solutions in markets where currently rental markets are underrepresented.
Okay, and Thibault, does that mean from the debt side, you're obviously tracking what the capital's doing because it's asking you for debt, but does that mean you're really having to do a lot of funding of development, because a lot of this seems to be for new product? So is it more development funding rather than asset purchase funding?
Yeah, I think first of all, I mean, it was mentioned by Samuel, there's not many portfolios out there. So I think the way the sector has been growing is actually building up a portfolio piecemeal, and the best way to do it is actually by developing. So we've seen a lot of traction in our development finance fund. Also because of this reason, there are a lot of investors, sponsors are going through development routes. But also, I think because the banks don't necessarily understand, the asset class, they are getting better and better. I think, depending on the geographies. But I think there are still a few geographies where banks are quite far away from understanding the asset class as other alternative lenders like us can underwrite and at a higher leverage point. Okay, good.
And just from the in terms of the drivers, when you're looking, because you're actually expanding quite a lot at the moment in terms of the student hotel, what ticks all the boxes for you when you're looking to invest in a city?
Well, we mainly there are a couple of things super important for us. One is there needs to be an international student community. The student market itself needs to be on the growing level. And secondly, the whole, let's say, hotel market needs to have a certain position, and that could be either more in the direction of the business hotel market. As Milan, for instance, it's been a city for a while where we didn't look at because we felt that the summer market was quite bad. And obviously in our hybrid model, we switch our rooms in the summertime to hotel and in the wintertime to students. But actually nowadays we're getting more and more robust, and I think a good hotel market is important, as well as there is a young startup community.
Okay, good. And Samuel, from that point of view, are you seeing particular? I mean, we saw the slide where you'd got the looking at the cities, and it was interesting to see how many cities there were in that sort of mid-range. Are you seeing any particular cities where there's more growth opportunity, I suppose, in any specific cities?
Well, some of the universities are more active in increasing the ranking and increasing the international recruitment efforts. So, and English taught programs, which are the three key variables for getting more students to your premises. And we see a quite Paris is really good, and the number of English taught programs is increasing. Aachen in Germany, for example. Warsaw is very aggressive in this sense. Vienna as well. So you have that from tier 1 or tier 2 range as well. And the question is which city. I would respond. The list would be quite long, but it's always per city. You need to look at the city level, not the country level.
Okay, good. And Claire, when you were looking at the research, in terms of the cities, were there any particular differences that came out? Because I know it was across 6 different cities.
Yeah.
Were there any differences that you sort of noticed?
Yeah, I think across Europe, residential is at different stages of development. So to take micro-living, for example, I think that's less developed in the UK than in some European cities. But we can actually trace that back to the regulation. In the UK, we have minimum space requirements that's actually double in France and much higher than in Germany. So I think we do need to catch up in the UK in terms of our legislation to really open up that market.
And how much of it, Rainer, is particularly around the student housing side? How much of it is that in the markets that you're in based on international students and that kind of prevalence now more for English to be taught as a language?
Yeah, I think if you take a look at the evolution of the sector in the last 10 years, I think the number of English taught programs across European universities now is massive compared to 10 years ago. And I think you also need to differentiate between, let's say, immature and more mature markets or economic strengths. So for sure, international students is one of the key aspects that everybody in that sector is focusing at. But also it makes a difference whether you embrace domestic students in Germany on the affordability ladder than, for example, in Hungary or in Poland, yeah, where they have less of an impact in the attractiveness of a location. Yeah.
Okay, good. And in the student hotels model, is that really, so for example, in the Dutch market, is that a mix of domestic students and also internationals? What's the mix?
I think it's per country different. In the Netherlands, I think on average we are on 70 to 80% international students, and the remaining one are, let's say, locals. In Italy, we reach 60-70% of Italian students staying with us. So it's actually way higher, and I think it also has to do that in Italy, for instance, and you see the same in Spain, cities as Madrid or as Rome, those are really magnets, and students all over the country are getting there to do their studies. So.
And I wonder, Thibault, just in terms of the geographies, because it may be more difficult to get development financing in some sectors in some of the countries where potentially actually there is a big opportunity for student housing, especially, and micro-living. What's your sense of that? Are there particular areas where the capital is driving you and you might be comfortable to lend on development in this sector that you might not in a different sector?
Well, it's a large question. So starting with geographies, I think definitely Italy and France are extremely attractive market fundamentals in my mind. So I'd like to do more. In Italy, it's tough to lend from a structuring standpoint, because we're a fund, we don't get a license, we need to issue bonds, which creates a whole bunch of issues for the sponsors. France, I think the banks are extremely competitive, so I think the opportunity for us is maybe less attractive in that jurisdiction. Similarly to Germany, Austria, where you can get like really cheap development finance. So I think where the opportunity is for us at the moment is really Iberia, a bit of Ireland, and Italy, if we can make it work with the structuring. So that's for the student accommodation bits, and I think either for these geographies in terms of fundamentals are extremely strong. There's a lot of pipeline in Lisbon and in some of the Spanish regional cities, but we tend to focus on making sure that the rents are affordable, and does that make sense for us on the debt? And actually on the debt, sometimes we can afford to underwrite much cheaper rents than what the sponsor needs to underwrite, which makes us comfortable, which is the beauty about doing a debt development finance. In terms of asset classes, where we see more and more opportunities are in the senior living space. I think there's a lot of banks who are not necessarily there yet. And especially right now in the UK, we are about to fund our third large senior living development for one of the top operators in the space.
I mean, that's interesting. Also, Sammy, I mean, so in terms of your data, it's moved from being purely about student housing, also then into that sort of more micro-living, co-living, hence the topic here. Do you see that ultimately also moving into that kind of senior living part, so that actually this all becomes, maybe it's different niches, but within the similar kind of topic? It's a lot of work for you if you're going to do that. But
And we understand that. I agree with Rainer that probably 5-7 years from now we will be talking about rented residential asset class, and basically the whole population is moving towards renting rather than more owning, and that co-living, micro-living, and service apartments and student housing will sort of become pretty much by principle the same product, and senior housing will be absorbed. Probably not the care housing, but senior housing as a form, because the senior citizens that go to senior housing have the same motivation, different age, but the same motivation, and by that principle, it belongs to the same family of the asset class.
And is that happening at the student hotel in terms of, the community part that you're actually getting? Because presumably there will also be a number of people who are even older than I travelling.
Even older than you.
Even older than I, yeah.
But we will always say we are open for everyone, and we are, obviously. And as long as you're young of heart, you fit in the student hotel. And the reality is, if I look at our hotel community, we have, I think, at least 50% of them would not directly tick the box if you would draft the ideal profile of a TSH student hotel customer. But at the same time, what we get as a response from those people, they literally feel younger when they are in that kind of community. So
I think it's interesting in the collective in the UK. I think they expected when they opened to have a very sort of young customer base and almost catching that post-university, but actually they've got from 18 to 66. So I think it shows that we all want the same things from where we live, and mixing with different generations is sort of how we want to live now.
yeah.
One last one, which is looking at all of this, which has been a broad-ranging discussion, and thank you for that. What does that mean for investment? Let's start with you, Thibault. If you'd got to invest somewhere in this space, where would it be?
Well, as I said, good quality sponsors, countercyclical, market fundamentals. So as I mentioned, in the student space, France, Italy, Iberia, Ireland, are excellent places at the moment. In the senior living, I think we'll look at it from a broader European perspective, because I think it's so far away from being what even student housing is. And then co-living, I think it's making sure that we are comfortable with affordability in terms of rents. And we've seen pipeline, whether it's in the UK, but also in France. So, there's a lot of pipeline coming.
Okay, Rienk, where should we be? Where should we be looking?
Well,
where are you looking?
I think there is a huge amount of tier 2 cities which today are not on the radar of a lot of those, let's say, bigger companies expanding heavily. And I see what we have in the Netherlands, which are cities of 100,000 people or inhabitants, and have 20,000 of students, and still we perform super well as long as they have that mix of, let's say, international students and a high ranking of university. So I think there's a huge amount of tier 2 cities, even tier 3, which are today not on the radar throughout Europe.
Okay, great. Rainer.
I think the safe route forward for investment would be stick to Samuel's list. The more adventurous route would lead you to Turkey, Greece, Serbia, Romania, where the environment is a little bit less institutional, but provides a lot of opportunities in the sector.
Okay, great. Claire.
Coming out of our survey of consumers, I think most people really wanted all-inclusive offering, really good technology and that sense of community, which then perhaps leads itself to co-working.
Okay, great. Samuel, last word to you.
I had the most time to prepare this answer.
That's true.
Of course, it depends on the strategy and how much capital you have. But I think if you have a mandate to deploy hundreds of millions, you have to stick with the list that you saw and go by the volume and size. If you don't have so much capital and responsibility, but you want to make so much money, I would go to more opportunistic territories where you would take more risk, but control risk, which are the tier 2 cities by population, but tier 1 cities by student population, like Aachen, Heidelberg, or CE countries and cities. And also in Australia and Latin America, there are some opportunities of this caliber to go a little bit of mainstream, where you have still high yields, low purchasing price, and great opportunity in 5-7 years.
Great, thank you very much.